Okay, so hello everyone, welcome back. And in today's video, we're going to be talking about the points of interest. Okay, if you hear me say POI, usually that's what I'm talking about, and I'm very happy that one of you mentioned it, so that at least we can be able to go over the POIs. Okay, so without like much talk, a POI is literally a point of interest. So a point of interest is an area I consider interesting for price action to begin, reverse, or like two price action you get. So to clarify, the term point of interest is not mine, and I heard it from somewhere and I picked it up. Okay, I think who mentions it? To be very honest, I don't know. But then I heard it from somewhere and then I picked it up. So with the points of interest, there are some that are going to be not most, some of them are going to be mine, and then other ones are going to be from ICT and yes, and liquidity inducement. So let me see. So I'm going to highlight them over here. So the first thing I consider a point of interest is a candle that is undecided, like an indecision candle. I don't know what is, I think it's called a doji. Yeah. So a doji, anytime you see a candle which is undecided, for me that is going to be one of my POIs. Okay, and then so a candle like this, usually with relatively smaller body. Yeah, and now another candle which is also undecided is going to be a hammer. It could be this way or to the other way upside. Okay, it could be an actual hammer, an inverted hammer, whatever it is, the candle has to be undecided. And then the next type of POI we're going to talk about is ICT's fair value gap. Okay, and with ICT's fair value gap, I'd prefer to see one of my POIs underneath that area, not just the traditional ICT order block. Then another type of POI which we're going to also talk about is, you see when the traditional ICT order block is formed. Yeah, let's say this is going to be a bearish ICT order block. This is me giving credit to the authors of the information. Okay, and made a few modifications, but yes, the order block is ICT's order block, and I don't think anybody else has come out to claim ownership of it. So let's say this is ICT's classic bearish order block. Okay, but I am not using this order block in all instances, especially when these order blocks don't have wicks on top. I'm not using them. And then what I use is the first wick that prints into ICT's order block. So let's say there's another candle right here, which is a bearish candle probably. Okay, anyway, so this is what I am going to consider as my POI. Okay, the wick that printed into the order block. With this POI, usually when it aligns with my time, would I sell over leverage? Yeah, but I consider this a very high probability POI. Okay, so let's go on and then show you in the charts. So for now, I'm going to leave you guys with these four. The fourth one is the ICT fair value gap. Okay, so POIs, let me just number them. This is 1, 2, 3. Okay, and then the fourth one is going to be the ICT fair value gap. I'm sure most of you know what an ICT fair value gap is. If not, I'll just show you on the charts. So with this, let me just show you quickly on this area. So once here we had a displacement to the downside, this is going to be an ICT fair value gap, okay, where there's a gap in price action, this area. That's ICT's fair value gap, and also from this point, this is also ICT's fair value gap. But there are instances when you have to use them. You have to make sure you're using this with time, okay? So let me delete this and also this. So let's, on Euro USD, let me show you. So with the indecision candles, you like to do this on the 15 or 30 minute, okay? For now, don't be dropping too much to the lower time frames if you don't know what you're doing on a bit of a higher time frame first. For me, 15 minutes is what I consider high. So with our points of interest, I'm first going to be aligning this with liquidity and structure, okay, and what we know about the market. So like I've taught you guys already, if we're looking for retracement moves, we're looking for retracement moves with a fib retracement, okay? So let's say with a fib retracement 2, we saw this displacement to the downside, or this displacement to the downside, okay? This was the lowest point in structure by then, this area, this area. So now we're looking for the highs that took them out from this joint to this joint, okay? So now we're looking to take sales at between, touch you guys, the 62 and the 79, okay? So let me just switch to that instead. So we're looking to take sales at our 62.79 level. So at our 62.79 level, we're going to be looking for points of interest. So like I said, the points of interest, we have ICT's fair value gap. This is one, which is not my it's not my biggest priority unless I'm looking for certain kinds of setups. I teach more in the advanced areas. So there's ICT's fair value gap here. There's going to be indecision candles here. If you're going to be on the 15-minute, the indecision candles are going to be your best friend. So this is our indecision candle, and where is it? Let's see if we can find one here. The first wick that prints into ICT's order block. So this was the order block, and this was the first wick that printed into the order block, okay? So depending on which one you see, you don't have to see all three at the same time. Depending on which one your eye sees first, just grab that and understand that you're trading a model. So it's not always perfect. So whatever your eye see first is what you're going to be focused on, and make sure you're aligning this with time and risk management. So let me change color of this candle. Rectangle. Okay, so the 15-minute, these are the three order blocks that we were looking for, and we found, luckily for us, we found all three. So the next thing is to wait for price to be in a premium or a discounted area. So now we're looking for sales, so obviously we're anticipating price to be in a discounted area. We're looking for sales because these were our points in structure. We are like liquidity points also, relatively poor lows. Price broke beyond that point, creating this particular area. So I've seen that most people are trading ICT's ES, not ES, but ICT's silver bullet setup. So with ICT's silver bullet setup, you honestly need to learn how to trade it. If you're newbie in the marketplace and then you just hop in trying to trade ICT's silver bullet setup, I feel like you're going to have a bit of a problem. So for now, relax for ICT's silver bullet setup. I saw it a couple of days ago, and he's right, but you need to know when to use it, okay? And it's also mainly for targeting drawn liquidity. So if your drawn liquidity has already been taken, there's no need to use what's the name, ICTs, silver bullet. Okay, if your drawn liquidity has already been taken, there's no need for you to do it. If you look back to the previous day, drawn liquidity has been picked over there. If you look back, there's no sell side or buy side imbalance, as he likes to call it. Then you are in for a whole ride. Okay, you are in to destroy your account with the silver bullet. So now we are going to wait because we don't trade silver bullet times, which is between 8 to 9. I have it marked up for some reason. Just recently I found out that that's when he takes his silver bullet setups, but we don't trade the silver bullet times unless there's something specific you're looking for. That's why I'm like, you should really calm down on the silver bullet thing. Okay, so now we're going to be waiting for our entry times. So this was 8, and we don't trade the market at 8. We trade from 9:30, 11:30, 14:30, and 16. Okay, so this is going to be 9:30. What's 9:30? So by 9:30 we don't have the shorts we're looking for. Okay, if you want to go according to structure and short this particular POI at this time, 8:45 is not our entry time. So yours is to wait, because as you can see, they are deceiving you with the structural push to think that the market is currently bearish. Yes, it is, but then there are POIs left to the top to be claimed in a premium area. Okay, so this if you look properly, I think this area is going to be the 50% where they fake out a lot of traders, because there's trust me, there's a whole lot of people buying and selling off the Fibonacci 50%, just marking the 50% area and then selling. And yeah, I'm not going to say it doesn't work, but also depends on the amount of capital you have to risk. If this is where you want to short, then you would really have to hold something. Okay, so this, we have a POI, and then now time is not in our favor, so where's 11:30? So at 11:30 we also didn't have, but by 11:30 we're creating a POI. Okay, so which is the indecision candle on the 15-minute. You can take a trade here and then place this underneath, knowing very well that your target is where you intend to take another entry. But I'll not recommend this entry for you guys yet. Keep your eyes on the price. Wherever you marked up is where you want to be looking at. So for this particular one, we have our indecision candle, we have our fair value, so we're going to be looking at specific times to trade it. Okay, so where's 13:30? So by 13:30 we didn't have price tapping into our area, but okay, let me show you. So like I said, ICT's order block, not always, but then the first wick that prints into ICT's order block in combination with time, look, this was ICT's order block. Yes, mind you how there's a lot of order blocks in this area. There's ICT's order block here, there's one literally here, there's also another one here. But then what will make this interesting is that this is the first wick that printed into ICT's order block right before my entry time. Okay, this wick. So now we're looking to enter the market at 13:30. So 13:30 is an entry time for us. So right here we saw how 13:30 dipped into this area, this point of interest, and refused to close underneath it. Okay, so once 13:30 refused to close underneath this area, I'm taking this particular trade, stop losses underneath what I call my POI, and targets to where I want to take these shots. Okay, and now let's see where this area is revolving off. So now this is 14:30. Okay, 14:30 was in the FVG. This 14:15 was in the FVG. We don't take trades at 14:15. If this were 14:30, I would have taken this trade. And still, mind you, I do not use the FVG the most, so I would have placed my stops above this area. Okay, and so your stops, if you're using the Fibonacci, try to place your stops above the 100%. Okay, so if you took, let's say, this short at, let's say, the 62 or the 79, in as much as it's going to be a relatively wider stop loss than I recommend. But yeah, put your stops above the 100. Okay, so it's going to be like maybe 20 pips of stop with this area 1005 2. So that's like an 11 pips of stops, and for me it's not the worst. Okay, 11 pips of stop is not that bad. So now we have 1430 tapped into your POI. So yes, this is your trade. Your stop loss above this area. Sometimes if you want to be very economical about your account, put your stop loss above the 1430 candle, because if you look properly, the 1430 candle is also a POI. Okay, the inverted hammer, whatever, that indecision, this one. So that's where your stops are going to be, and then you target the next liquidity point in the market. So now the next liquidity point in the market was this area. Okay, there's also ICT's fair value around here, but I personally think these markets are going to tank a bit lower to grab more liquidity to the downside before the push up. So yes, if you're targeting this area, targets would have been hit. If not, somewhere within this area, and you want to be looking at time. So right now these markets are not prime for any buys yet, so you'd be calming down on your buy entry, so very conservative about them. Okay, and wait for 11:30, 13:30, 14:30 at least. Okay, so I feel like one example is definitely not enough, but with the other examples I just highlight you very quickly. Okay, because the video is going to be so long and probably a bit disturbing if you have to see this all the time. So I want you, with my approach, I literally want you guys to go about and find out things by yourself. Okay, I show you like 1-2 examples, you back test, and then you see how things work. Okay, don't take my word for it, just go onto the market and then see how things work by yourself. Okay, so over here, 15-minute indecision candle, it's the red one, this is better now. Okay, and then at what time is this move happening? 14:30. Okay, so 14:30 tapped into your area, your stops underneath this candle. 14:45 literally also created the same, not the same one, the indecision one. Okay, the indecision POI, the doji, and then you can literally take a trade, place your stops underneath 14:45, but this was our initial POI that we saw. Okay, and then you're targeting an important area in structure like a premium area or another POI. Okay, so let's see over here again. I don't know if I've taught you guys Tokyo entry times. Yeah, but none of your Tokyo entry times was by this area, but this is ICT's fair value gap as a POI. Now the ones I favor, this is going to be one of my POIs, the indecision candle, inverted hammer, whatever you want to call it, but this is not my entry time. Okay, 8:30 definitely no. So once again, the first wick that prints into ICT's order block, which is this wick. Okay, this one. So at what time is price tapping? 9:15. Okay, so 9:15, by 9:30 you can take your trade, place your stops above this area. And also now ICT's order block, once again, the first wick that prints into this. Okay, now you'll be looking at time. Let's see what time this is. 13:15. 13:30 you can be in your trade, and then your stops above this area. I feel like that's very wide, but yes. Let's see another area. Over here we have ICT's fair value. Now look, this is ICT's order block. Okay, bearish, bullish, bearish. Now the first wick that prints into ICT's order block is what we're going to be interested in. So this wick, extend. Price never touched it. Okay, So over here we missed by like 21. Yeah, we missed by like a pip, and it's going to happen. Okay, but I'm going to advise that you guys stick to the rules. Like, yeah, don't be mad if you miss a trade. These kind of things happens to every trader. Okay, I currently know somebody who's in gold longs, and I feel like gold. Okay, let me just be quiet on this one. But I currently know somebody who's in gold longs, and then they've dropped about like 40 pips from where they entered. They're probably stopped out because they have like a 10 pip stop loss. But then these kind of things happen. Okay, so again, ICT's fair value gap. Mind you, are using all of these with time. Okay, it's more like a time and price theory, just like is being taught by most of the algorithm educators. Okay, so let's see, what time is this? 16 is the next probable time I'd like to take a trade. So 16 right here, if you can see the indecision candle. So indecision candle formed here, next trade 16, stop loss above the indecision candle. So yeah, I'll end the video here. 21 minutes is a bit long, so like go back in, test for yourself, and yeah, as usual, any questions, if you are in the group, any questions in the group, and happy trading to everyone. So I'll see you guys in the next video. Thank you a lot. Bye.